Ladies and gentlemen, good day and welcome to Q1 FY26 Result Conference Call hosted by PTC India Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this call is being recorded. With this, I now hand the conference over to Ms. Priya Chaudhary from PTC Financials. Please, thank you and over to you, ma'am.
Thank you. Good morning, everyone. I'm Priya Chaudhary. I'm Head Investor Relations at PTC India Financials. I would like to welcome all on today's call for a discussion on Q1 FY26 quarter results of PFS. The past quarter has been marked by significant progress in our key focus areas. There has been visible results on the steps taken towards resolving the legacy issues, with 38% of our gross stage 3 resolved in Q1 FY26. Now on the remaining gross stage 3, another 30% is in advanced stages of resolution. Our whole-time Director Operations, Business Head SME and CIO were onboarded in the last quarter. You will hear from a Director Operations, Mr. Sanjeev Kumar, during the course of the call on the business update. While we witnessed disbursement momentum, but AUM did moderate due to scheduled repayments and prepayments. The company remains focused on strengthening the portfolio with a balanced approach, prioritizing sustainable growth, operational efficiency, and customer-centric solutions. As we navigate through a very exciting phase in our organizational journey, we remain committed to delivering consistent value to our stakeholders while upholding transparency and accountability. I will now like to introduce the top management present in today's call, Mr. R. Balaji, MD and CEO, Mr. Dilip Srivastava, Director of Finance and CFO, and Mr. Sanjeev Kumar, Director of Operations. With this, I will now like to hand over the call to our MD and CEO, Mr. R. Balaji, for his opening remarks and update on the company's performance. Over to you, Balaji.
Thank you, Priya. Good morning, all. So, we are happy to have you all as a part of our Q1 investor call. Dilip would take you in detail through the financials and Sanjeev will share with you the operational highlights. I would just like to give some overarching remarks. One, firstly, the PFS continues on its transformation journey. The transformation consists of two parts, internal and external. And we have had some good positives on both the fronts, and in some areas we could have done better. As far as the internal transformation is concerned, one of the things which has been a strong positive for the organization in this quarter has been the strengthening of the top management leadership. If you all recollect, we have said earlier that our emphasis is on shifting from individual capability towards building institutional capability. As a part of that, we have got Sanjeev, who joined us as Director of Operations. Apart from coming at the leadership level, he comes with immense experience in the infrastructure space. He is joining us from India Infrastructure Finance Company, and he's got close to 30 years of experience in financial services, split between institutions like ICICI, State Bank, India Infrastructure, and also National Highways Authorities. So with that, if you look into it, we have got a strong leadership pipeline. Two, one of the areas which we have spoken about earlier was building a more granular book. So apart from intensifying our core traditional areas of infrastructure lending, albeit with slightly smaller ticket sizes of 120 to 150 crores, we were also stating earlier that we'll also start looking at certain other newer segments with 40 to 60, 70 crores of loan cases. So as a part of that, Abhijit Kishore has joined us as Business Head of SME. So he's also joined towards the end of May. And today the world is becoming more and more driven by technology and digital. So we have had a new CIO who joined us in early May, Siddhartha Datta. He comes with immense experience in financial services. He was earlier a CIO for a small finance bank. Initial part of his career, he spent some 10, 12 years in SAP working on the financial services packages. So with this, the leadership team is more or less ready. Now the going forward would be how do we augment the team capacity at the junior levels, especially in the area of credit and risk, so that our ability to process higher quantum of cases is manifested. Now, as far as the overall business is concerned, one area where we did significant work and the results came through was in the area of resolution of stress assets. All of you might recollect that in our call on May 10th, we had stated that 3 cases, that is NSL, Vento and ILFS, we expected these 3 to be resolved by September, and another case, Danu, in the second half of the year. We are happy to state that all the 3 cases are more or less achieved closure in the first quarter itself. NSL, the NCLT gave its verdict, and we got the entire amount, 125 crores back. The winning bidder has paid it to us. The successful resolution applicant has paid it back to us. That's a big positive. More importantly, while we got the entire principal back, that's an opportunity for getting some small additional money based on certain other securities extended by the erstwhile promoter group. As far as Vento is concerned, we went through a change of management. We had a 2-stage process wherein people were invited to bid. Subsequently, people who qualified and were above a certain threshold were invited for an auction process, which was electronically. And the winning bid has come. So we got 115 crores, while the winner has paid the performance guarantee of 20 crores. The remaining would come in the course of next few weeks. So by the end of August, even this Vento would have come. So actually, if you look into it, our gross NPAs and net NPAs of around 10 and 4% includes Vento as a NPA. So in September, it could go away. Third is ILFS. The company had met its performance obligations, and in March, it got investment grade rating from 2 credit rating agencies. Consequently, post the approval of the RBI, permission was obtained to upgrade it to standard. This was orchestrated by the lead bank, Punjab National Bank, and accordingly, we have now taken, the intimation was received, although after the end of June, but before the publication of the results, in accordance with the accounting standards, it has been upgraded to standard. So all these assets have been resolved. More importantly, some of the old assets which were written off, we got certain recoveries. Dilip would share about the same. This is as far as recoveries are concerned. 2, in terms of internal transformation, I spoke about leadership augmentation, senior leaders joining. We also taken certain steps towards developing the capabilities of our employees by senior leaders and middle management leaders went through assessment centers. So once the action area has been identified, it will augment their ability to contribute better to the organization in the forthcoming future. The one area where we could have done better was in the area of disbursements, total business done. But here I would like to say there is 2 parts. The total disbursement which we gave in the first quarter is 138 crores. Compared to the fourth quarter, which was only 50 crores, it was a significant increase. And we had stated earlier that in the full year, our target is 4,000 crores. So compared to that, there has been under delivery. But what we have done is we have evaluated significant number of proposals, around 1,200-1,300 crores of proposals in the first quarter were evaluated. And many of these quite a few of these cases were approved in the second quarter in July. We hope to catch up whatever shortfall we had in the first quarter by September. So in August and in the second quarter, July, August, September, we'll be able to ensure that we are more or less in line. But more than the quantum of the proposals, what has been heartening is the fact that the entire disbursement has been to private sector entities. So that's something which is very, very important, because in the first quarter, our disbursement of 138 crores was entirely to private sector entities. If we contrast it with last financial year FY25, only 296 crores was disbursed to private sector entities in the entire financial year. So actually what we did in entire financial year in private sector entities, more than 40%, close to 45% of that we achieved it in the first quarter. And this disbursement to private sector entities is close to nearly 1.6, 1.7 times of what we disbursed in financial year 24. That the private disbursement to private sector entities or 80-90 crores. So our trust towards getting business in the open market, focusing on relatively smaller cases so as to reduce the concentration risk, continues, and until the momentum is clearly stabilized, because we are coming from an adverse history. Now the team is generating more business proposals, evaluation is on, my systems are getting strengthened. It will take a couple of more quarters to stabilize, but we are confident that we will be able to get where we ought to go in the next couple of months. That's what I have got. Now Dilip would share some of the financial results, and then Sanjeev will speak about operations.
Thank you, Mr. Balaji, and good morning to all of you, all the investors. So as we have already circulated the investor presentation as well, so our total income during the quarter Q1 of this financial year has been 142 crores against the Q4 of previous year of 155 crores. So there is a decline in the total income on account of that our AUM size has been reduced, and which Mr. Balaji has already explained. And the PAT, it's a 137 crores. It's a improvement from the previous quarter. It's from 58 crores to 137 crores. Our gross stage 3, there is a lot of improvement, right from 15% gross stage 3, it has reduced to the 10.22%, and net stage 3 from 6.56%, it has reduced to the 4.13% in the current quarter. Our cost of borrowing has also reduced from 9.69% to 9.67%, and we have been taking up with all the lenders, existing lenders, as well as we have been taking up with the other lender as well to improve our that borrowings and reduce the cost of borrowings. Our total this net NPA actually that has been increased on account of that earlier this case that this Dhanu, in case of Dhanu, that there was a High Court stay. Now it has been removed, so it has been it has been slipped to the NPA. Although we have already done the proper provisioning against that, and our return on assets it is improved on annualized basis from 4.02% to 9.77%. So overall financial performance in terms of probability and other parameters, there are a lot of improvement. And now I'll request our Director Operation to brief about the proposals and other business prospects. Mr. Sanjeev.
Thank you, Dilip. Good morning all. I am happy to be the part of my first investors call at PTC Financial as Director of Operation of the company. I am pleased to share a quarter update with you on business growth and initiatives in recent past. There was a continued progress in strengthening our credit pipeline during the current quarter. As part of our focused effort to deepen origination and build a robust pipeline, there has been a steady increase in the number of quality proposals under evaluation. During the quarter, we conducted detailed due diligence across diversified infrastructure segments. During the quarter, company has undertaken multiple initiatives to strengthen its asset side performance and institutional capabilities. Efforts are being directed to boosting execution speed, responsiveness, and overall delivery capacity. The team is being augmented with enhanced capabilities to activate venture across the infrastructure value chain, covering both energy and non-energy sectors. In this regard, SME vertical has been set up with the onboarding of a dedicated head SME. He is very experienced in this area and has started delivering. And the team built up is currently underway to progressively scale the book with a focus on granular and diversified lending. Our origination efforts remain broad-based, with sectoral interest spanning renewable, roads, and conventional thermal sector also, along with growing inquiries in segments such as water treatment, solar parks, and structured corporate banking proposals. In line with our calibrated approach, we continue to consciously moderate our average ticket size to ensure prudent exposure per borrower. Aligned with our current book size, the granular approach supports better diversification and risk-adjusted returns. In this effort, the average ticket disbursement ticket size has been around 35 crore in Q1 FY26. In next quarter, as we scale up our book in measured manner, this disciplined approach to sanction and disbursement will remain a key focus area. The recovery efforts on stressed assets have also been encouraging, as already shared by Balaji and Dilip also. And we believe these will support sustainable growth going forward. We'll be able to resolve our remaining stage 3 assets also in coming quarter. During the month of July, already we have sanctioned something around 600 crore of loan proposals, and proposals amounting to maybe a little more than 1,000 crore are already in pipeline at different stages of sanction and due diligence processes. That may be covered in the month of August, in the first half itself, we hope for that. And efforts are being made to accelerate the disbursement of the sanction limits also. So we'll be able to actually ramp up our disbursement and enhancement of our books also. And in coming 1 month, the difference will be seen very soon. So fresh sanctions in new segments will continue to drive portfolio diversification and enhanced yield. The company is also deepening client partnership with increased emphasis on group level borrowing. Repeat clients are actually coming back again to PFS, and sector-specific structuring and servicing capabilities are being ramped up to actually cater the different segments of customer base. That is, the efforts are being taken to actually enhance our book size in next quarter. With this, I hand over to Priya.
Thank you. Now we can open the session to the Q&A, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Vishal Mehta from Oaklane Capital. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible. Please go ahead.
Hello, sir. Congratulations on a terrific performance on the resolution part. I just wanted to reconfirm. You said that we will be ending with about 4,000 crores of disbursement as we were guiding. And in Q2, we will kind of cover up what we've lost in terms of the ground for the disbursement in Q1. Is that right?
That's correct. Okay, Balaji will try to actually take this up.
Yeah.
Please.
The plan for the full year is around 4,000 crores of disbursement, and at this point of time, we are confident that we'll be able to achieve it. First quarter has been below expectations, below the plan, and like what I reiterated in the opening remarks, we'll be able to make up for the shortfall by September, as per our plan is concerned.
Great, sir. That's very encouraging. And sir, one more thing, if you could just explain, we have much larger peers that are also in this business. How are we differentiating ourselves in terms of, what are the key parameters where we differentiate ourselves in whatever we are offering versus them, and how will that help us grow better?
Sanjeev would answer that, huh?
Yeah. See, there are so many bigger players are already there in the market, but you'll understand that the market is so big that we have got sufficient of our targeted customers also there in offering. Our offering would be differentiated in terms of speed by which we will deliver the sanctions and disbursement, and different segments in structured finance, as well as niche segments where other bigger players may not be very interested. So these are the focus area where we'll have yield also, we'll have NIM also, looking at our cost of fund. And apart from that, we are focusing on a smaller ticket size business, which is out of favor by these bigger size infrastructure finance companies. So we are differentiating ourselves from others in terms of area of delivery, speed of delivery, and the structuring and servicing capacity what we'll be offering, being a very close-knit team we have. So this way, we hope that we'll be there very soon in the market within a big way. And see, everything is there in plate where we have got sufficient business to choose. There is no lack of business. We'll definitely deliver on to that.
Okay, sir. Just to follow up on that, you said that we focus on speed for delivery. Could you just give us a flavor of what would be our turnaround time in terms of a loan from the proposal to the disbursement stage, and how would that compare to maybe say larger players?
See, larger players having a larger ticket size loans, right from the inquiry to first disbursement, their turnaround time is something around 3.5 months. Whereas we are delivering in 1 month and 1.5 months time, though our ticket size is lower, and we are expecting that to improve in that area even more. Our target is to from inquiry to disbursement should be finished within 30 days time.
Great, sir. Thank you so much, and all the best for your performance. Your commentary has been quite encouraging. Thank you.
Thank you.
Thank you. The next question comes from the line of Chana Madhu, an individual investor. Please go ahead.
Thank you for this opportunity. I'm audible, sir?
Yes, you are audible, sir.
So I increased my holding from 1,20,000 shares to 1,35,000 shares after listening to your Chinese bamboo example for this company growth path. You already mentioned in last quarter con call that you have the plan to raise 300 crores to 500 crores by issuing preferential shares. Why not you issue preferential shares at an early stage to a strong private player and induct them into the board to enhance the credibility of the company among the investors and lenders?
Thanks for your query. So basically, things like this, as goes through multiple stages, what we had communicated last time was what we're also factoring in our budget. And we are internally dialogue, both the management and the board is seized of this issue. At this point of time, the primary thing for us is to ensure that we get the business onto track. That's what we are doing. The quality has been improved sourcing leading to more business disbursements. This is also something that's happening. I would just want to caution you that such activity, we had planned it for the course of this year. As and when the time is right, we will take the necessary decision take the approval of the board once and subsequently the shareholder approval. Having said that, you can rest assured that the entire management, both Dilip, Sanjeev are here, even I am there, all of us and the rest of the PFS employees are working actively to ensure that there is significant value creation for all the stakeholders by ensuring we build a sustainable and a world-class financial organization.
So one more thing that I am very disappointed with the loan book size. Then in last 2 quarters con call, you had assured that 79% growth in the loan book size, and in the third quarter you assured 15% growth in the loan book size, but that is not visible in the achievement, sir.
You are right. You're perfectly right. On May 10th, in our investor call, I said henceforth we are looking at a 7 to 9% quarter-on-quarter growth. We still hold on to that guidance. The only thing which we would like to ask from each of you is a little bit of patience. Because we are a small organization, the number of cases that we do on a quarterly basis keeps on changing because the numbers are not very large. And while we got a strong sourcing pipeline, some of the proposals got deferred to quarter 2. And like what we said in the introductory remarks, whatever disbursement target which we have taken for the year, will be achieving that, and more importantly, the shortfall for quarter 1 will be covered up in quarter 2. So that's something we are confident of. Soon we hope to get back onto track. Now, I'm sure you and the rest would appreciate that we have put significant effort and the outcomes are shown in the resolution of the stressed assets. Now, with the entire management team in place, and more importantly, the people have got significant experience from the financial services and infrastructure lending, the team's bandwidth to seize the market opportunities is enhanced significantly. So we're confident of getting to what we said we would do. In the next few quarters, you'll be able to see how we're able to deliver and what we have committed.
Okay, sir. Thank you, sir.
Thank you. Before we proceed to the next participant, a reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Gaurav, an individual investor. Please go ahead.
Hello. You audible, sir?
Yes, sir, you're audible.
Yes. Ma'am, I would like to know, because I read this in the rationale of CRISIL and ICRA, that there is a delay in fundraising on the company's part. So I just want to know what is the response among all the bankers and investors who want to lend it to PFS? What is the challenges that PFS is facing in raising those fresh funds?
We have been taking up with all the existing lenders, right? As well as we have been approaching to the other lenders as well who are not our existing lenders. And over and above, we have started taking up with the overseas lenders as well, considering the cost and tenure, all those things. Those things are under discussion. And as of now, we have a sufficient liquidity in the system, right? And close to 1,500 crores we have a liquidity. And that main issue for the it was one of the 3 aspects that was there as a corporate governance as well as AUM size. Corporate governance has already been cleared, right? So now that audited financials of the previous year as well as this quarter results has also been shared with the lenders. We have been taking up with the lenders, and we are expecting in this quarter that we'll be having sanctions in our hand. So as far as disbursement is concerned, we have a sufficient liquidity in the system. So that arrangement of the additional facilities will not be a challenge for us.
So are there any fresh sanctions in pipeline that we can say that there is a municipal approval or a final approval from the banker?
Yes, sir. As of now, we don't have a copy of sanction letters, but these are the very advanced stage. We have been discussing, we have been meeting with the senior team of the bankers, and things are in a positive direction. We are expecting that we will be getting some sanctions this quarter.
Okay. So, if I may know, what is the cost of borrowing that we are targeting for these incoming sanctions?
So, cost of borrowing
minus currently.
As I already explained that our existing cost of borrowing, there is an improvement from the previous quarter. So average cost of borrowing 9.69% has been reduced to the 9.67%. And further, we have been taking up with the existing lenders to reduce the spread, right, so that our cost of borrowing is reduced. And we are also we have been working to diversify our source of borrowings, right? As I explained that we have started to taking up for the with the external commercial borrowing as well, we are in the discussion, right? So although it's not right time, but we have started the discussion so that we can diversify the source of borrowings, right? And as I explained that in this quarter, that some sanctions would come in our hand.
Sir, just I want to know one thing. What is the future expected cost of borrowing from these incremental borrowings that we are trying to borrow from the market?
Our target is to lower the existing cost of borrowing, and I feel that we will be in the position to reduce our overall cost of borrowing.
So no number as of now?
So giving the number, actually, that it all depends upon, that means bank to bank, but still giving the number, I think don't think that it will be appropriate, but we have been trying to reduce it as much as possible. Our focus is on that part, sir.
Okay, sir. Thank you.
Thank you so much.
Thank you. The next question comes from the line of Amit Chheda from Banyan Capital. Please go ahead.
Thanks for the opportunity and congratulations on the NPA resolution. So my first question is, now that 3 out of the 4 accounts are almost resolved, right? So are you nudging the rating agencies for an upgrade?
Rating agencies that is due in the August-September. So we have been informing or giving all the updates to the rating agencies, and we are expecting that when this renewal due renewal in the August and September, so things it should be in the improvement side. We have been discussing and meeting to senior team of the rating agencies as well. So we are expecting that improvement should be there.
So whatever conditions they have, to give us an upgrade, are we on track for those conditions?
So let me jump in out here. See, basically, rating agencies don't give any conditions each of these things. It's a function of a few parameters. One, the intrinsic health of the business. 2, the surround effects. Like this company was plagued by other issues, instability, some legacy issues, etc. 3, what's happening in the external environment. As far as the intrinsic health of the business is concerned, we have enhanced significantly in 2 areas. 1, ensuring the quality of the book improves significantly. So that's a significant area of improvement. 2, the quality of our sourcing. That's also happening. Secondly, if you look at the surround effect, they've also cleaned up significantly. No qualifications, each of these things. But the external environment is very volatile, and that we need to wait and watch. And more importantly, we're going back to the first one, intrinsic quality of the business. One of the things which people would look for, while we got some positives, there are 2 areas where we need to demonstrate significant improvement. while the green shoots are there. One is the quantum of disbursement, and two is the ability to raise funds. In the first quarter, like what Dilip was saying, we have a significant liquidity. Therefore, we did not press significantly on sourcing more liabilities, because let's extinguish it. Because if you source more and if you hold more, there will be a negative carry on it. But in the second quarter, it would be happening. So we are hopeful, but whether it could happen in 1 month or 2 months, we'll have to wait and watch. But the realistic thing would be, once the process is completed, definitely the quarter 2 results will come. We expect some significant good news.
Okay. So this 1,500 crores liquidity was excluding the money that is going to be received from Vento, right? The 90 crores balance amount.
So this is a liquidity in the system available. So this is inclusive of our HQLA requirements. So I was just trying to explain that sufficient funds are available to meet our this requirement of disbursement. And as Mr. Balaji explained, that we have been taking up with the lenders, but this quarter our focus will be more with the lenders, so that we should be having in our hands sufficient further sanctions as well, so that our overall target is met.
Okay. So with 600 crores sanctioned just in the month of July, what is the disbursement target for Q2?
We are targeting something around 1,000 to 1,200 crore in Q2.
Okay. And so what was the repayments in this quarter?
Yeah. Yes, sir.
Repayments. What is the repayment?
Quarter 1 repayments. Quarter 1.
Repayment to the lenders, existing lenders you are talking?
No, repayments of the loans.
Of the loans.
Repayment or prepayment?
So repayment as per the schedule was 553 crores in the current quarter.
And what do you expect for the full year?
So
So we expect something around 1,000 to 1,500 crore prepayments and repayments, scheduled and unscheduled both, by the end of this year. So we'll plan accordingly, so that the balance sheet should grow, covering all these prepayments and scheduled payments also should be covered up by the fresh disbursements.
Okay, just one question. So we disbursed like 138 crores in Q1, and we are targeting 1,200 odd crores in Q2. So if the disbursements would drastically improve in H2, is that what you're targeting? Because
this is being done on the basis of the proposals what we are having in pipeline at different stages of due diligence. So we expect ramp up in sanctions, and this will convert in disbursements immediately the next month onward.
Here I would like to add one thing. Just don't think that from Q1 to Q2 we are going some 8-9 times, therefore Q2 to Q3 will be 8-9 times. See, there has been some spillover from Q1 to Q2. Once we come to 1,200 crores, like what I said, our full year target is 4,000 crores. That's what we are looking for. We are confident of achieving that.
Okay. Thank you so much.
Thank you, sir.
Thank you. Before we proceed to the next participant, a reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Mangesh Kulkarni from Almondz Financials. Please go ahead. Hello. As there is no response from the participant, ladies and gentlemen, we'll take this as the last question for today. I would now like to hand the conference over to Mr. R. Balaji for closing comments.
Thank you all. Like what we said at the beginning, our organization continues its transformation journey. So we have put our internal house in order. Quality issues have been resolved. Leadership has been augmented. Systems and processes have been strengthened. We are also undertaking a few significant IT initiatives. With all this, we are internally geared up to meet the increased business requirements coming from sourcing. Now, generating more business is the key objective of the company. Like what Sanjeev spoke about, we are doing it across multiple dimensions. One, reigniting our engagement with the existing past borrowers with whom we got an excellent relationship. Two, diversifying into all parts of the infrastructure so as to reduce the concentration risk. Three, more importantly, reducing our customer responsiveness. This not only includes reducing the turnaround times, but like what Sanjeev also said, speaking about structuring the solutions, developing solutions based on customer requirements. We are focusing on this. To ensure in this delivery, we'll be augmenting our internal capability by training them, but more importantly, onboarding new resources so that our ability to handle a larger traction of cases will manifest. This is what we are doing, and going forward, we expect to continue on this journey. What I would like to caution, since our base is small, the number of cases which we will be sanctioning and disbursing per quarter would be around 8 to 10, 12 cases on a quarterly basis. Now, a couple of cases here or there might make the quarter seem exceedingly good, or sometimes might make it look it's below par. So what I would like to caution is we are committed on the 7 to 9% quarter-on-quarter growth in terms of AUM. But when you're evaluating the quantum of disbursements, we should always take a slightly longer horizon to see what is the trend. That's what we are doing. And next time in October, we hope to come back to you with an equally set of good numbers, and more importantly, a PFS that has grown significantly compared to end of quarter one. Thank you.
Thank you very much. On behalf of PTC India Financial Services Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.